Good morning, I'm Joe Neighbour from Signal Centre, and this is the latest instalment on FX Roundup from myself, looking at things from a technical perspective. Just before we get into the charts, we'll just run through the latest headlines on what's moving the FX markets over the last 24 hours. Yesterday was an important day for the US because we had the latest reading on inflation in the US with the CPI numbers out. Inflation rose to 7%, which clearly is a very high number, and as a result, we saw risk appetite boosted across many asset classes. We saw the dollar dip very sharply off the back of that, retreating to 2-month lows, and we also saw euro US dollar strengthen to 8-week highs despite an unconvincing euro performance. Sterling also joining the party that held firm with fresh 2-month highs against the US dollar. So now let's just jump into the charts and have a look at what this means from a technical perspective. For many weeks and many months, I have been talking about this bullish channel in the dollar index, as you can see on this chart in front of you right now, highlighted by these yellow bands. And yesterday what we saw was a break to the downside of that channel following this prolonged period of consolidation that we've seen on the dollar index for the last few weeks or so. As you can see yesterday, this is the candle that we're referring to, really impulsive move to the downside and closing below the lower end of that bullish channel. We've seen follow through selling as well today. We're down by almost 0.2% on the dollar index this morning. And just sort of scrolling a little bit further back to put this into a little bit of context for the longer term picture, this blue line that we have highlighted here that goes back to September, it's quite an important support. It was also one of the necklines that I used to basically work on the basis that we've completed a double bottom pattern on the dollar index chart. So we are seeing a retest of that at the moment, and so far it seems to be holding. So if we can continue to see some support hold around about this region, maybe down to as low as 94.46 on the dollar index, then I think there is still some potential for the outlook to remain bullish for the dollar index, and this may be to be an opportunity to buy into US dollars, taking advantage of this recent correction lower. So for now, the outlook still remains bullish in my opinion, but obviously we have seen a corrective move lower, and providing we can stay above 94.46, then we may see more strength build in the dollar over the coming days and weeks. But for now, very much in corrective mode, and we may see some choppy price action in the very short term. If we take a look at what's happened on the euro dollar side of things, so we've been very bearish on the euro US dollar for quite some time now. We've been talking about this completion of this large head and shoulders top pattern that took place back here in sort of August last year. We've seen a continuation lower. Euro against the US dollar has actually been one of the most persistent downtrends in the FX space for some time. But now what we've seen after a period of consolidation is maybe some sort of short-term bottom form. If you look down here on the right-hand side, we were forming some sort of triangle pattern or some kind of ending wedge maybe on euro US dollar, and we've broken out of that formation by trading above this resistance here at 113.86. Really impulsive move higher, backing that up today with further gains by almost 1/4%. The next resistance level to target is up at 115.25, which is highlighted by this blue line or blue resistance line that I've got on the daily chart. Also, what's quite interesting is that we are trying to take out this downtrend resistance line as well. So we've got a little bit of time obviously left in the trading session. This won't actually complete until 10 p.m. UK time today on my charts. So if we can close above that on that basis at 10 p.m. tonight, then we've got a close above the resistance line, and we can maybe expect to see a continuation higher in price in the short term. We do have some resistance levels, as I said, most importantly this 115.25 level to consider. Above that we may see an extension up to sort of 116.64 to 117.04. But ultimately the outlook still remains, I think, quite bearish on euro US dollar. But there is an opportunity here in the short term for speculative trades on the upside potentially to try and play this maybe sort of mild correction that we are seeing take place at the moment in euro US dollar. Obviously it's going to be influenced by factors that are ongoing with the economy, most notably what we're seeing with inflation and how the US Federal Reserve are going to tackle that, which is clearly going to be, an ongoing concern. Finally, going to take a look at cable because that has seen a really strong push to the upside. Sterling actually performing quite nicely at the moment. We were trading in a downtrend, but the downtrend resistance line was targeted on the 11th of January. It did really nothing in terms of providing resistance actually. So we've seen a continuation higher, really sharp move to the upside. We do have some resistance encountering around about 138.34 and above that 138.91. This will be a really important test, I think, for the bulls and whether or not they've got the appetite to continue pushing this higher in the short term. So into this kind of region, I'd be thinking maybe about fading the gains that we've seen in sterling versus the US dollar. Obviously, we are going to need to see some appetite come back for the US dollar for that to play out. But do be careful chasing this higher because it has had a really strong move to the upside in a very short space of time. That's it from me today. Just a very brief roundup. I'll be back next week with some more. And until then, everybody, trade safe.